Greetings, members, one and all of the Salivation Nation. The answer to the question that you see before you here, does gold's value increase during recessions? I can answer that right now and be done with the video. The answer is no. Really, the question is does the price increase during recessions? What is the difference between value and price? And that's what we're going to talk about with gold. And some of this can be translated over to silver as well. But I think we really do need to take a step back and look at the most stable asset class in terms of wealth preservation ever, and that is gold. Without further ado, let's explore! This comes to us from visualcapitalist.com. How gold performs during recessions, and how has it performed in the past. This is a neat little infographic that bases its data from macro trends, and we're going to look at it and study it and look exactly what has happened in the past. You know, you've heard me say time and time again, as often as quoted, I believe it was Benjamin Franklin, or maybe it was Mark Twain, that once said that history may not repeat, but often it rhymes. And so this is why we're looking at the past performance of gold during recessions, and we're looking at it right now in its performance as we head into likely a recession if we're not already in one right now. It's long been considered a safe haven, gold has, for investors when markets are in turmoil, and we're going to look and see how the price has changed during historic recessions. So we can see here in this pretty cool infographic, I think, you have the gray areas that represents recessions. The S&P index is outlined here in blue, and the nominal price of gold per ounce in dollars. Nominal means the price is in dollars, not adjusted for inflation. Just to give you an idea of kind of where things are, because by both measures, it would appear that both are great ways to be able to get rich. But, we have to look at it in inflation adjusted. I kind of wish this was done in inflation adjusted dollars, but I digress. And here we can see, during the 2020 recession, we did see, just at the tail end of that, gold rose, hitting the in fact, it was about $2,050, if I recall correctly, in about August of that year in 2020. And there was a small recession then that occurred. Let's go back in time, though. Let's look at 1973 from this infographic. And remember that the gold window was closed down, and the 1973 recession was before it was legal to own gold here in the United States again. And so, or maybe it was around that time that the legislation became available so that we could do it. But the first coins and the first ownership really didn't happen until about 1974, 1975. But as you can see, gold was up 87%, and the S&P was actually down. The S&P 500 was actually down 13% that year, and we're during that recession. And it looks like gold really kind of broke out in the midst of it, but you'll notice at the very beginning that there wasn't a lot of movement. In fact, it went down a bit at the very beginning of that recession. Then we had a very small recession in 1980, and gold was down for that recession, -5%. The S&P, however, was up 6.6%. Now think about that for a moment, because gold went to its, at that time, spiked up dramatically, as you can see by this chart. But the recession was really tied to it, was not tied to that. It was an anomaly, basically, from the Hunt brothers cornering the silver market. And so the prices spiked up, and then the recession hit. So that's why gold went down there. And as you can see, it kind of recovered a little bit after the tail end of that recession. In about 1981 and 82, it kind of went back up again to about $600 and some an ounce. So it was delayed. Gold's performance was delayed after the fact. Then we had the 1981 recession here, and actually, I'm taking that back. That was That was, I'm looking at my time span here. That was still in 1980. It was a very brief amount of recessions there for just a month or so, I guess. And then 1981, gold climbed up 1%, 1.6%, while the S&P outperformed gold that year, up plus 5.8%. And then we had a period of stability throughout the 80s, and it wasn't a recession until 1990. And again, it was a brief recession, maybe last 2 months or so. And we can see here, in that recession, we saw gold climb up marginally, 0.1%. During that recession, the S&P was up 5.4%. And then we go through the periods from 1990 to 2000. And in 2001, there was a small recession, and that very well may have been because of the terrorist attacks at 9/11. And we saw the S&P spiked up dramatically heading up to there. And so its fall was measured through that recession, but not a whole lot of downward movement, down a negative 1.8%. Gold went up 5%, but that's not saying much because gold had been on a downtrend. Again, I remember those days. Gold is trading around that time, around $282 an ounce. I remember, but yes, the recession really had a negligible effect on gold then. In 2007, 2008, that was the big one. It was a longest lasting recession since the 1981 recession, and even then it lasted a little bit longer. And we can see gold was actually up. But we saw it kind of fluctuate pretty dramatically within that time frame, as you can see nominally. Pretty interesting. Gold was up 16.3%. The S&P was down negative 37%. So they kind of worked and broke away. That was one of the biggest breakaways between the two during a recession that we've seen. The S&P and gold broke away dramatically at around 1996, 97. They crossed over. And then they kind of went in lockstep throughout the mid-2000s and the first decade of the 2000s, and then fell dramatically during the 2007-2008 recession. It was a pretty deep recession. Many feel we're overdue for another one of those, if not worse. Moving forward, we see that gold dramatically went up in price, as did silver in 2011, while there was no recession during that time. And then we saw the S&P really started to climb up and recover its losses that we've seen from the 2007 and 2008 crisis. A lot of that, I feel, is because of the liquidity injected into the markets by the Fed with multiple rounds of quantitative easing. And that continued on throughout until we saw the pandemic hit. And then we saw it drop down, but not by a whole lot. Amazingly enough, where we saw gold rose 5.6% during the pandemic recession there of 2020. Now many feel that we are in a recession again, and the S&P has dropped 19, almost 20% as of the 6th of July, when this infographic was published, and gold is down marginally about 2%. So what will happen? We'll see. Let's see what else they have to say about it. Gold has been traditionally considered the safe haven asset, with many investors turning to the yellow metal during recessions and times of turmoil. So how does it hold up when the economy tumbles? And we can see this is that chart from Macro Trends, and here's a little table that tells us a little bit more, in some ways maybe somewhat more revealing. Gold's value comes from its scarcity as a precious metal, in addition to its long history as a stable medium of exchange, hence the value in comparison to the price, because the price movement moves from day to day, month to month, and really when you look at the downward trend or the upward trends during recessions, you have to give an account of the context of the price movement before or after. Gold also has a low negative correlation with the stock market, suggesting that changes in the price of gold are largely independent of how stocks are faring. As a result, gold is considered an effective diversification tool for investors who want to hedge their bets. But has gold helped investors weather recessionary storms in the past? Here in chart form, you can see that in 1973, And this gives us the length of the recession, 16 months. Now, if we look back at the chart, yeah, there you go. That's 16 months there. That's just over a year. And apparently it didn't do so hot. No, it did. The S&P didn't do so hot, but gold did, up 87%. But I think that's somewhat of an anomaly because that was a period just after Nixon closed the gold window and the price discovery was able to make root. And I think in some ways it was independent of that. 1980, gold went down. That was during the 6-month recession. Gold went down, and the S&P went up 6.6%. During 1981, which is another 16-month recession there, and it was 1.6% increase, and the change in S&P was 5.8. The S&P beat gold during that recession. 1990, S&P beat gold during that 8-month recession. 2001, S&P went down 1.8%. Gold beat the S&P during that period of time. 2007 through 2008 and 2009, actually, that's 18-month recession, much longer recession. Gold was up 16.3%. The S&P dropped 37%. 2020, gold beat S&P again. So since 1971, when the gold standard was abandoned, gold has largely seen positive price changes during recessions. In the last 3 recessions since 2000, its performance has countered that of the S&P 500. While the increases in value haven't been dramatic, they help cement gold's position as a hedge against financial turmoil and as a store of value, thinking about it in terms of value instead of price. So when the stock market collapsed in 2007, investment demand for gold increased as investors looked for a safer option. Between 2007 and 2011, gold's price more than doubled. Similarly, with the fear of uncertainty at a high during the COVID-19 pandemic, gold-backed ETFs saw record inflows, while the price of gold reached an all-time high. But that may have been largely because of the inflow of the paper version, which there's a lot more of those derivatives than there are the physical. While gold's price tends to rise during times of economic turmoil, it often stagnates or falls when the economy is healthy and investors seek riskier investments. As a result, it's important for investors to consider the overall macroeconomic and geopolitical environment when looking at gold. And so that leaves us to wonder if it's going to shine this year. We've got a couple of rate hikes behind us and likely at least one more ahead. Some say we will have more. Some have predicted 6, 7. We'll see. But nonetheless, history shows that gold often outperforms the stock market and the dollar following interest rate hikes after underperforming in the lead up to the rate hikes. Additionally, high inflation is eroding the purchasing power of each dollar and incentivizing investment in a tangible asset like gold and other hard assets. We'll see how it plays out. Right now, in the last few days and weeks here, gold has been down, but I am positive that we're going to see gold catch up and maintain its value, regardless of really what the price does. But I think the price will soon reflect its value in due course. Let me know what your thoughts are in the comment section below. If you enjoy videos like this, I hope you'll consider pressing the notification button so that you'll know when a new video is released. And I want to extend a multitude of gratitude to you all for taking the time to watch and encourage you to please rate, share, comment, and subscribe.